The storm desk. Read the storm, book the roofs. You built this company on storm claims. Then Florida changed the rules under your feet. The claim machine stalled, and the schedule that filled itself after every hail event went quiet. Now you face a retail pivot you never planned. By the end of this, you will know how to move a storm shop to customer-paid retail in 5 steps without crossing the line that now carries a felony. Same crews, same trucks, a different cash machine you control. Start with why the ground moved. Florida spent 3 sessions taking apart the engine that made aggressive claim roofing easy. Assignment of benefits, the tool that let you pursue the homeowner claim, was effectively ended in the December 2022 session. The one-way attorney fee that pushed carriers to settle marginal claims is repealed. Supplement leverage shrank with it. Meanwhile, the market healed. Citizens, the state-backed insurer, proposed its first rate cut in a decade for 2026, a slow squeeze on any roofer whose pipeline depends on claims. Get the word retail right before you spend $1. Retail is any job where the homeowner is the buyer and decision maker. They pay with cash, savings, equity, or financing. They choose the scope. They sign a contract with a price on it. The roof might still be old because a storm wore it out. Storms do not stop mattering, but the transaction is between you and the homeowner, not a carrier. That one change rewrites your sales, your cash, and your compliance. Step 1. Pick a retail lane your crews can actually run. Retail is not one thing. Shingle replacement, tile relay, metal upgrades, repairs, maintenance plans, and wind mitigation re-nails all carry wildly different margins. A full Florida shingle roof commonly runs in the low to mid-teens of thousands for a typical home. Tile and metal run higher. Those are regional anchors for this year, not your price list. Your number comes from your own job costs. Name the roof types you take and the work you decline. That protects margin. Here is the hard part. Retail has no storm to draw the map. The old model worked because a hailstorm handed you every house worth knocking. Retail hands you nothing. So you draw the map yourself. You need which roofs are old enough to be real prospects, and which are 3 years old and a wasted visit. The Small Business Administration publishes a sensible market research framework. Use it to narrow to streets where roofs are entering the back half of their life. Target with no storm and no map, and you burn money on new roofs. Step 2. Split your insurance and retail workflows so they stop contaminating each other. They can share crews, trucks, and suppliers. They cannot share paperwork, sales language, or metrics. The blur is where compliance, trouble, and margin leak both hide. Insurance work revolves around documentation, storm date records, photos of conditions, measurements, an estimate the homeowner takes to their carrier. Retail work revolves around choices, a scope, product selections, a price, a payment schedule. A retail proposal should never read like a claim supplement and never predict coverage. Build separate templates. Inside step 2 is the line you cannot blur, the felony part, so train it word for word. Under Florida Statute 489.147, you may not interpret policy language, advise on coverage, adjust a claim, or take claim handling pay unless you are a licensed public adjuster. You never handle or negotiate the claim for them because that alone makes you an unlicensed public adjuster. The safe posture is narrow. You inspect, document, measure, estimate, and do the work, while the homeowner manages their own claim and the insurer decides coverage. And never waive, rebate, or absorb a deductible, because in Florida, that is a 3rd-degree felony. Step 3. Rebuild your offers and advertising to be truthful and legal. The Federal Trade Commission sets the floor. Price, savings, warranty, and financing claims must be truthful and substantiated. Florida adds a hard ceiling. Any flyer or door hanger that pushes a homeowner to file a roof claim is a prohibited advertisement, unless it carries a 12-point disclosure that the deductible is theirs and that no roofer may waive it without committing a felony. So never push claims at all. A mailer that says roofs on your street are reaching end of life, get a straight quote with financing, is a retail offer, not a solicitation. And know why a Florida homeowner buys a roof when no storm is forcing it. Age and visible wear, an active leak, a planned remodel, insurance renewal pressure, because carriers routinely surcharge or drop older roofs, which turns a 15-year-old shingle roof into a now problem with no damage at all, a home sale that flagged a roof, or wanting an upgrade. None of those need fear, a fake storm story, or a claim. Build the offer around the real reason, and the sale gets easier to close and collect. Step 4. Replan cash, financing, code, and production. Cash no longer arrives in carrier checks on a claim timeline. It arrives as homeowner deposits, progress payments, and a final payment you have to actually collect. So set payment rules before you scale. Your deposit percentage, your progress triggers at delivery and dry-in, and how you enforce the final. Financing is the engine. In retail, affordability is your problem, not the carrier. And a $15,000 roof shown as a monthly payment turns a maybe into a yes. Stand up a financing partner first. 2 more door openers in step 4. First, the partial repair rule. The old 25% rule forced a full tear-off whenever you touched more than a quarter of the roof. Softened by Senate Bill 4D, now under Section 553.884, a roof built to the 2007 code or later often only needs the repaired section brought to code. So you offer an honest, smaller job instead of a forced replacement. Second, wind mitigation. Documenting storm-resistant features on the state form like deck renailing, a water barrier, and a hip shape. Florida insurers must credit them. A licensed contractor can do the inspection, and it never touches a claim. Step 5. Review real job cost results every month and adjust the mix. A retail pivot is a loop, not a launch. Measure it by job quality, cash, and repeatability, not by sold revenue, because sold revenue lies. Run 2 scoreboards, not 1. Track retail by lead source, close rate, gross margin, change orders, and days to collect. Track insurance by its own cycle time. A blended dashboard hides which lane is carrying the company. Compare your proposal to what actually happened. Then, act on the pattern. Now here is your cheapest retail pipeline, and it is not in any zip code. It is your old book. Every estimate you ever wrote, every customer you ever roofed, every not right now homeowner who did not have enough damage to file, known roofs at known addresses, doing nothing. A homeowner you told 4 years ago, your roof has life left, now has a roof 4 years older. None of these are cold leads. They let you on the roof once. Reread that book against current roof age. Flag the ones likely due, and reach out clean for 0 ad spend. Here is where Roof Predict fits and where it does not. Retail whole problem is drawing the map a storm used to draw for free. Roof Predict pairs an estimated roof age range with each home's storm exposure history, house by house, so a mailer or canvasser reaches the roofs most likely to be due instead of blanketing a street. Point it at your old book, and it scores which past contacts crossed into replacement territory. It does not inspect the roof, diagnose damage, or decide coverage. Roof age is a planning range, not a verdict. The list draws the map. The inspection earns the sale. Close the loop. Pick a retail lane your crews can run. Split the workflows so they stop contaminating each other. Rebuild offers and ads to be truthful and legal. Replan cash around deposits and financing, not carrier checks. Then review the numbers monthly and adjust the mix. Document. Do not diagnose the claim. The insurer decides coverage. The homeowner owns the claim. The storm market that rewarded aggressive claim roofing is not coming back. Draw the map of which roofs are actually due. Stay on the right side of every line and let the numbers tell you what comes next.